Hello, how are you? This is on behalf of Dr. Labib's Academy. We are going to cover the topics related to ACCA professional courses certification program, and in this session we will have sessions covering the various modules of ACCA. In this session we are going to cover with respect to the professional level, strategic business reporting, SBR, international and UK. We will cover, every session we will cover one question with complete explanation covering both theoretical aspects and its application and calculations. Hopefully you will have a very comprehensive view once you complete the session. I want to request you all that please subscribe to this channel on the YouTube, so that the moment I will post new videos on new topics, you will get intimation, and share the video and like the video. Okay, and if there are any kind of comments, suggestions, please let me know. You can write in the comment box, so that it will make things more clear and it will be helpful to the students. Okay, thank you so much. We will begin. Okay, now we are covering the concepts with respect to the parent company and subsidiary company. There is one question related which covers this is the question which covers the different aspects of the modules. The first aspect is we are talking in terms of consolidated statement of profit and loss account with respect to a parent company and the subsidiary company. Initially, parent company holds 60% of the shares in the subsidiary company. That is given here, is it? They have initially how much it is? Initially it is how much? They say that it is going to be 60% of the equity interest in the Guinea, and later on what happens over a period of time, it has been acquired on 1st of July 2004, but later on 31st March during the year 2005 and 2006, year ending June 30th 2006, after 9 months they have disposed of 20% of equity interest from the Guinea company. It means that initially, see, we have to keep very concepts very clear. Is that initially when they have purchased it, and they have purchased that Zippy, is it right? This they have purchased on when? They have purchased on 1st July, is it right? On 1st July 2004, is it right? 1st July 2004, and on 31st of March, is it 2006? Is it right? Just have reference. Okay, 31st of 2006. They have disposed of how much? They have disposed of 20% of share. Means in the beginning, when they have purchased 60%, there is a relationship of what? There is a relationship of a parent company and a subsidiary company. But later on, when they have disposed of after 9 months, okay, after 9 months, this relationship has been converted from a subsidiary to what? To an associate, because the rule says that if the parent company is right, if the parent company acquires more than 51%, then only there is a relationship between a parent and a subsidiary, is it right? If it is less than 51%, then automatically the concept will change to what? If it is going to be less than, is it right? If it is going to be less than the concept is going to be what? It is going to be changed to associate, the relationship, and automatically it will, as per the international financial reporting standards, things will change. Okay, this is the first aspect as such, and based on that we will work it on. What first you have to go through the context, how it has been. Zippy is a manufacturing company. Just a little bit. We have to go through the question in detail. Okay, we have to utilize the reading time as much as possible, very effectively. Zippy is a manufacturing company with a reporting date of how much? 30th June 2006. It has a wide portfolio investment properties. It's an investment in many entities. They have spread. It is a very diverse group as such. They have given a draft profit statement of profit and loss account for one of the entities. Is that which is the entity? This is the for the one of the subsidiary. Okay, subsidiary. It is not related to the parent. It is related. This information related to the subsidiary company. Now they gave you the as on when? As on 30th June 2006. Okay. Now it gives you a very clear picture how we are going to work it out. Now they have given, this is all related to subsidiary revenue, is it? They have gross profit, they have something investment income, is it? They have other comprehensive income is there, and profit for the year, is it? So on and so forth. Fine. That's good. The following information is related to the properties of the group's statement profit and loss account. Is it? It is related to the group statement of profit and loss account. And other means one side they gave the subsidiary company, and the second aspect they are talking about the group company. Is it right? Now see, little bit we have to do a basic groundwork, and automatically things will be easy. See the things what they have said. They have said that on July 1st, is it right? On July 1st, 2004, they have acquired how much? 60% of the equity shares. Is right? A public limited company. The purchase consideration, how much they have paid? They have paid 90 million. And what is the fair value of the net assets of the acquired company? 114 million. This is the method they are using. Which method they are using? They are using the full goodwill method for all acquisitions. Is right? And fair value of the NCI is how much? The fair value of the non-controlling interest of the subsidiary is how much? 15 million. Okay, as on 1st July. Goodwill has been reviewed annually for impairment. Fine, there is no impairment as such. If there is an impairment, we have to do the calculations according to the impairment. Okay, according whatever the values given, we have to do the relevant adjustments. Now this is the thing which is going to make us to really think. Okay, fine, that this is what we have used to do. Basically Zippy disposed a 20% equity interest in Ginny when they have disposed on 31st March 2006. When they have disposed after, is right? They have disposed after 9 months of the current year. Definitely you have to divide the profits. Okay, you have to divide the profits for those 9 months. Is it right? During the year, how much they have disposed of? 20%. Previously it was how much? It was initially, is it right? It is initially how much? It is initially 60%. Now after disposal, is it right? After disposal, definitely it comes down to how much? 40%. Is it? Now the fair value is how much? Fair value is 62 million. And Zippy left with a significant influence over Ginny. Definitely they have 2004, 2005, 2006. Is it right? I mean they have made the things really very impressive. Zippy accounts for investment in subsidiaries at cost are included. Is it? There was a gain in investment income. How much there is a gain in investment income? There is a gain in investment income is how much? 14 million, within the individual financial statement. See, they are giving something individual financial statements and consolidation means we have to take into consideration how we have to treat the items in the individual financial statements and how we have to treat the items in the consolidated financial statement. The net assets of Guinea is how much? Is 118 million as on 1st July at the beginning of the year, is it? And this was reflected in the amount. All gains and losses have been accrued evenly, and the disposal is not classified as a separate major line of business. Fine. The disposal is not classified as a separate. It's a part of the things. Now, this is the first part. Is right? This is the first part as such. Second part, what they say is that this is the second part. There are three sections are there. Is it right? There are three sections are there. This is related to what? This is related to the point number 2. Okay. This is related to point number 2. This is related to point number 1. Okay. Question number 1. Okay. In the first one, is it? And what is the question number 2? Zippy holds properties for investment purpose. Definitely, is it? When you are talking in terms of properties versus in the investment purpose, which accounting standard we will use? We will use an accounting standard of what? We are using the accounting standard of IAS 40. Is it right? IAS 40, which is going to be called as a investment property. Is it? See, now we have to be very clear. We have to be very clear about IAS 16. Okay, property, plant, and equipment, and IAS 40 investment property. How we have to differentiate? What are the conditions on which we are going to identify it as a property, plant, and equipment, and what as per the standards, and how we have to identify as per the investment property. Is it? That is very, very specific, very important. See, they are almost asking for this question. It is for how many marks? This is for 8 marks. Okay. They are asking for how many marks? They are asking for the 8 marks. Zippy, now come back to this. Zippy holds properties for investment. On 1st July, the Zippy held a 10-floor block. So they have a 10 floors. Worth of how much? Worth of 90 million. Okay, 90 million. With the remaining life of how many years? 15 years. The first floor was occupied. Fine. They are using the same first floor for themselves, and the second floor was let to Boo. Another company, which is it is a subsidiary of Boo, but it is free of charge. Fine. You can have a free of charge, but definitely there will be a materiality. There will be the concept of rent will have to be incorporated in the while preparing the financial statement. The other 8 floors is that the other 8 floors are all unconnected to third parties. Is that on a normal commercial land? See, this is where we have to make the distinction. Is it right? Is it? This is where we are. 2 floors will be for them property, plant, and equipment, and other 8 floors are for what? Other 8 floors for the commercial rent. When Boo vacates the second floor, when Boo vacates the property next year, it will be let out to third parties. Fine, that is related to next year. We are not concerned about this as of today. Is it? It is estimated that the fair value of the block. See, what is the value in the beginning? The value in the beginning is 90 million. Now, what is the value? The value is 96 million. Is it right? Now, Zippy has a policy. We will take that into consideration, the fair value. Is that it is related to what? It is related to fair value. Zippy has a policy of restating all the land and buildings. Fine. Whenever you are making a revaluation, should be applicable to all. Is that? It should not be a very specific one. Is it right? At fair value at each reporting day. This is the policy. Is it? Is it a uniform policy for that? The only account entries for the year ended 30th June in relation to this office block has been correctly included in the rental income in profit and loss account, it can be assumed that each floor is equal size and depreciation is charged to administration cost. Fine, that's okay. Is it? This is the things related to the block where they are occupying 2 floors, and the rest is going to be given it for a rent. Means something for investment purpose, something for rental purpose. Next, what they say, during April 2006, an explosion of different office block caused substantial damage and estimated that the fair value, there was some fire loss due to fire, damage due to fire, 30 million. The value of property has been fell from 20 million to how much? 14 million. Is it? They have estimated the cost of 3 million would be required to repair, but they are unsure. Is it? They are not sure about this. Unsure whether they can carry out the repairs. Is it? Whether they sell the block at the ready. Means this decision is it? There is not clear cut. Is it right? They don't have any. Where I will write here. Is it right? Is it right? What they say is not yet decided. Is it right? Not yet decided. Unsure whether they carry out the repairs or sell the block at 5. The property has been left in the financial statement as 20 million. A provision, they have created a provision of 20 million for the repair cost. See, when they have decided, when it has been approved, then only the provision has to be created. But if they are not undecided and not clear, definitely we should not go further with that. Is it? These are the 3 different. This is the very easiest one. Is it? See, if you understand the concept, things will be very, very specific. Is it right? If there is anything, please let me know. Is it right? This is the work. For the first one is we are talking in terms of the reduce of the share from 60% to 40%. Necessary things we will do. And the second part is about investment property and property, plant and equipment. And the third one is with respect to what? Provisions. Is it right? Now, first what we have to do, we have to be very specific about the requirements. Is it? Explain with suitable calculations how the investment in Guinea should be accounted in the consolidated statement of profit and loss. And more importantly, they are talking in terms of what? They are talking in terms of OCI. Okay, that is very important. Is it? What we have to show in profit and loss account and what we have to show in OCI. Is it? The second one is explain with suitable calculations. Is it right? How the office blocks should be accounted. Is that here what we have to do? We have to very clear about what is the IAS 16 and what is the conditions for IAS 40. As simple as that. Is right? With respect to the end. Now, what they are saying, explain why the accounting treatment of the 10th floor block in Zippy individual non-consolidated will differ from the treatment of a consolidated financial statement. Is it? They are talking about what is the theoretical aspects. Is it? Theoretical aspects. They say very clearly calculations are not required. Is it? Calculations are not required. 11 plus 8, 19. Is it? 19 plus 4, it is 23 marks. Okay. And the next part is what? Next part is I gave space so that we can do workings during this. Is it? The second part is what they are asking us. They are asking something on other comprehensive income. What they say, what is the requirement? Is it? What is the requirement? Discuss the difference between a OCI and profit. What items should be shown in the OCI and what items should be shown in the profit and loss account. Directionally, why some gains and losses can be or others cannot be reclassified to profit and loss account. They are asking a specific question with respect to employee benefits. is a remeasurement component of what? See this, see, one, when you are talking about, the moment you see the question paper, you should be very specific what are the requirements and what they are targeting to us. Is it what they are targeting to us? Automatically what will happen? Our task will be more easy as such. Is it our task? Now what we'll do, first we will do the part A, then we will do the part B as such. Okay, then we'll do the part B as such. Now, is it right? Fine. Is it? No, it's fine. Is it? Now, see what they say. They are talking in terms of what? The first thing they are talking in terms of the first thing they are talking in terms of the acquisition, is that disposal, is that they have acquired on 1st of July 2004 60%, and they have disposed it off. Is it right? They have disposed it of the now is it? What we have to make sure that first we will make it a point that how we are going to work out. This is very important, is it? Where we are talking, these are the other things, is it? I have written it initially, is it? 9 months. How we have to distribute it within the 9 months as such, is it right? Now, there are 3 aspects are there. The first one is the concept of the first 9 months. Then they have reduced the share, they have reduced the from 60% to 40%, and we have to know how it has to be worked out with the related thing. Now, is it right? Now, what is there? Is it when they gave you the profits? Is it right? How much profit they have made it? Is it right? First we will do the things where it is needed. Is it right? I will put this letter we will use for the our further calculations. Is it right? Where we have to show the what we have to show in the profit and loss account and what we have to show in the other comprehensive income. How much they have made a profit? Is it right? This you put it as see that's we are 32 million for the year. Is that? This is for how many months? This is for 12 months. Is that? We have to convert it into what? We have to convert it into 9 months. Is it right? 32 times, is it? 32 times what we have to do? 9 by 12. Is it right? 32 times 9 by 12. How much it will come? It will come to how much? 24 million. Yeah, this is the 24 million for is it? And when we are doing this, is it 24? How much they have made a profit? They made a profit of 32 million for the 12 months period. For the 9 months period, is it? It is how much? It comes to 24, and this has to be consolidated. Is it right? Now, what is the in 24 million? Is it right? In 24 million, we have to say how much is the in 24 million. Is it right? How much is related to the which comes Zippy? Is it right? How much is Zippy and how much is for the Ginny asset? Zippy is how much having 60%. Is it right? It is how much? It is 40%. Is it right? It is 40%. Now, is it right? It is how much? 40%. Now, if you take that into consideration, is it right? If you take that into consideration, how much is there? 24 times 0.4. Is it right? 24 point, it comes to how much? It comes to 9.6 million. Yeah, the rest is that we are not talking about the we are not talking about discussing about the parent company, is it right? Okay, fine, you take it, nothing will happen, is it right? We don't need that. Okay, we don't need that. 24 is it right? 24 into 0.6. Yeah, we don't need that as such, is it right? We don't need that as such. It comes to how much? It comes to 14.4 million. Okay, this is the first thing, is it? Now, how much this is attributed to what? This is attributed to the non-controlling interest. Is it? Now, what it says, right? This is what we have done. This is we have done with respect to what? This is we have done with respect to profit for the year as such. Is it? This is for the profit for the year as such. Now, is it? Now, the second part is what? The second part is OCI. Is it right? Other comprehensive income. Is it? How much is the other comprehensive income? OCI. I will use another way. Okay, OCI. When we are saying other comprehensive income, again the same treatment. How much? It is for how many months? It is for 12 months. Is it? 12 months. How much? 12 months is 16 million. Okay, 12 months is 16 million. For 9 months, how much? For 9 months, if you take for the 9 months, is it right? 16 into 9 by 12, is that 16 into 9 by 12, it comes to how much? It comes to 12 million. Okay, it comes to 12. Now again, is it 12 million? You divide it. We don't need for the parent company, but fine. Okay, no, is it right? The Zippy is there and Ginny. We are very much concerned about the Ginny. Okay, we are very much concerned about whom? Ginny as such. Is that how much is there? This is going to be how much? 12 million into 0. What is the share? 40%. 0.40. It comes to how much? It comes to 4.8 million. Fine. It comes to how much? It comes to 4.8 million. Okay. Now, is it? This is the first basic thing which we should understand. Now you make it clear that we have to divide the profit for the year and we have to divide the OCI. Is it? This is what will happen. This is for the 9 months. Okay. Next. Okay. I'll put one. This is over. Is it? The second part. What happened? The second part is we are talking in terms of what? We are talking in terms of loss of control. Is that this makes things really interesting as such? Is that how it's not difficult as such? Is that what happens? 1/7/2004. Is it right? 1/7/2004. How much they have? They have invested 60% in Guinea. Okay. Then now on 31st March. Is it right? 2006. They have sold off. They have 20% sold off. Means the investment is that the investment will decrease to how much? The investment will decrease to how much? 40%. The moment it is decreasing, is it right? Decreasing from 60% to 40%. The status, okay, the status will change. Is it right? Will change from where? From subsidiary. Is it right? From subsidiary to an associate. Is it? To an associate. That's what it says. Is it? Now, if the moment it is going to be associate, definitely they are selling off. Is it? They are selling off the what they are doing. They are selling off selling off. Is it? Selling off 20% stake. Is it right? Selling off the 20% stake as such. If they are selling off the 20% stake, definitely there will be what is the disposal, and we have to do it will give rise to profit or loss during for this investment, is right? It will give them. See, we have what we have to do. We have to consider, is right? We have to consider the profit or loss on disposal, is it right? On disposal of how much? On disposal of 20% stake, is it right? We have to take into consideration. That's very important. That's what we have to think over it, is right? We have to think over it. Now fine, this is where how we are going to work it out in the same way as such, is it? In the same way as such. Now we have to be how we should know what is that what is the, whether it is a profit or whether it is a loss, is it right? Take into consideration, they have made it very clear, is it right? They have made it very clear. See the thing, how much they have. They said that they have sold off, is it? They have sold 20% on the cash. 20% of the stake has been sold for cash consideration of how much? 44 million, is it? 44 million they have sold it off, and the remaining value is how much? 62 million, is it right? Remaining value is how much? 62 million. Fine. Now from from this what we have to take into consideration what is the cash consideration and what is the on the disposable day, the remaining 40, how much is the value of the remaining 40%, is it right? Now from this we have to take, what we have to do, we have to deduct the, we have to take into consideration the goodwill, is it right? We have to take into consideration the net assets at the normal format which we use to borrow, and we have to consider that the NCI, is it right? Is it? We have to take into NCI. Now what we are doing, we will calculate, is it? Put the heading as such, is it? As, is it right? Loss, profit, is it right? Profit or loss on disposal, because we don't know in the beginning whether it is profit or loss, is it right? We don't know the things as such in the, it is whether it is a profit or it is a loss. Now what, when you are doing the things, is right, make it 3 columns, is right? Particulars, dollar and dollar for working, is it right? Make it a small one, is it? Don't use any how we can work it out in a simple way, is it right? Yeah, you can use Excel in the examination, is it? Fine. You can use the table. Okay? What is the proceeds? Proceeds are how much? Proceeds on sale. Okay, proceeds on sale of 20%. Is it? Is it? Proceeds on sale of 20% is how much? It is in millions. Okay, it is in millions. Is it? It is in millions. How much proceeds on sale of money is? It is 44 millions. Okay. Okay, fine. Next, what is the fair value of remaining? Fair value of remaining interest. You have to add. Is it right? Fair value of remaining. Is it right? Remaining interest. How much is the fair value of remaining interest? It has been given. Is that how much? 62. How much you will get? It comes to how much? 62. If you take this into consideration, total how much? 4 plus 2, 6. 10 plus 4, 106. Is it 106? Now, I'm changing the color. Is it? Now, what we have to do from here? We have to deduct the goodwill. Is it? First, we have to calculate the goodwill. Is it? How much is the goodwill? Is it right? Goodwill. Put it as note 1. Okay, put it as note 1. Fine. we will do little bit is it between as a note 1. Note 1, is it right? Note 1, goodwill. Okay, note 1, calculation of goodwill. At disposal, is it right? Calculating of this goodwill at disposal. How much is the, see, what is the fair value of consideration in the beginning? Is it right? In the beginning, fair value of consideration. Is it right? Fair value of consideration. Where it has been given? It has been given at the beginning. Is it right? When they have purchased it. Is it right? How much they have purchased on 1st July? 90 million. Is it right? How much is that? 90 million is the fair value of consideration. Is it right? Fair value of consideration is how much? Fair value consideration on at 1/7/2004. Is it right? How much? It is 90 million. Okay. Now, is it right? It's how much? It is 90 million. On this 90, what is the fair value of NCI? Is it right? What is the fair value of NCI as on that date? Is it right? 1st July 2004. Is it right? 1st July fair value of NCI at, is it right? 1/7/2004. Is it fair value is how much? 50 million. Is it right? Fair value is how much? 50 million. Now, is it right? How much it will come? It comes to 140 million. Okay. From this you have to deduct what? We have to deduct fair value of the net assets. Is it right? Fair value of identifiable net assets of the subsidiary. Is it right? How much see, it is given very simply. It is given how much is there, where it has been given. See, it has been given here. I will what is the fair as on it is how much? 114 million. Okay, 114 million. Is it? If you take that into consideration, 114 million. Is it right? If you take that, it comes to how much? It comes to 26. 3 minus 126. This is nothing but the goodwill on disposal. Is it right? Goodwill at disposal. This is note 1. Okay. This is note 1. Fine. Take this one into consideration. Is that? This is note 1. How much is the note 1 of goodwill? Goodwill is coming to how much? Goodwill is coming to 26 million. Okay. Next. Fine. Now we have to take the second one. What we have to take? We have to take net assets. Is it right? Net assets. Is it right? At disposal. Is it right? Net assets at disposal. Take it as a note 2. Okay. Take it as a note 2 as such. Now, we have we'll take sequentially. Okay. Note 2. Is it net assets? This is goodwill at disposal. Is it right? This is net assets at disposal of the subsidiary only. Okay. Now, how much is the net assets? They have given net assets as in the question. Is it right? How much they say net assets are how much? They have mentioned where? Yes, they have mentioned here. Is it right? How much is the net assets? They have mentioned net assets are how much? 118 million. Okay. 118 million. Okay. 118 million. Is it? Next. And they have we have taken pre-acquisition profits. Is it right? profits till 31st March, OCI till 31st March. Is it right? Is it? Now, net assets at disposal. Fine. Net assets at disposal. Yeah. Net assets, is it right? At 1st July 2005. Is it right? 2005 as per given. Is it right? How much is the net assets? It is 118 million. Is it? Now you have the profits. Is it right? Profits. Is it right? Till. Is it? Profits till what? 31st March. Is it right? Profit till 31st March. We have calculated. Is it right? Again, I will do for your understanding. Is it right? 32 million into 9 by 12. Is it right? How much is the profits? It is going to be 24 million. Is it? OCI is this. OCI is it till 31st March. Is it right? OCI till 30. How much is the? Just don't. Nothing will happen. Is it? 60. If you do it, it will be easy for us to make sure. Is it? 9 by 12. How much it is there? It is going to be 12 million. Fine. If you do the total, how much will get? You will get 144. These are the net assets as disposal. Fine. These are the net assets as per disposal as such. How much is there? 154 million. Is it right? This has to be taken. How much is there? 154 million. Fine. Now, once you have done that, is it right? Once you have done that, what we have to do? What is the NCI share at disposal? Is it right? NCI. What is the NCI share at the disposal? Is it right? We have to remove the NCI share. How much we have to remove? We have to take only 40% into consideration. Is it right? We have to take out, we have to eliminate 20% because we have sold it off. Is it right? We have sold it off. This is note 3. Okay, this is note 3. What the note 3 says? Note 3 talks about what is the non-controlling NCI at disposal. Is it non-controlling interest at the date of disposal? Is it right? At the date of disposal. Fine. Now, as per the question, how much is there? As per the question, how much non-controlling interest as on acquisition? Is it right? Non-controlling interest as on acquisition is how much? 50 million. Okay. Non-controlling interest as on acquisition is how much? 50 million. Is it right? Next. From this, they have said, is that there is how much is fair value of identified net assets are how much? 114 million. Is it right? Fair value. And what is the value of the assets, net assets at disposal? 154 million. Okay. Now, what we have to make sure that 1 minute. Is it NCI at acquisition? Is it? Dates are very important. Is it right? NCI at acquisition. What they say? The fair value of identified net assets are 114 for all acquisitions, and fair value of NCI was how much? 15 million. 1st July 2004. Okay. Fair value of NCI acquisition at 1st July 2004. Okay, this is very, very specific. How much is there? It is 50 million. Okay, now what we have to do? We have to take the NCI. Is it? Share of NCI share. Is it right? NCI share. Is it right? Is it? Of post acquisition. What is the value of NCI we have done here? Is that NCI at disposal is how much? Is that NCI at disposal is how much? 154. Is it right? NCI at disposal is how much? NCI at disposal is 154. Is it right? 154 million. And they have mentioned very clearly the net net assets at disposal. Is it right? The net assets at disposal. Is it that is not NCI? Sorry, it is what? It is the net assets. Is it right? It is the net assets at disposal is how much? This one. And what is the yeah. Is it? Now, how much is there? Net assets at disposal, it is 154. Is it right? Net assets at disposal is 154. Now, if you take that into consideration, slowly, what fair value is how much? Fair value is 114. Is it right? Fair value is how much? Fair value is 114. Is it right? 154 minus 114. Is it right? Into 0.4. Yes. Is it? How much is there? Is it? Now, if from this, what we have to do? We have to take the fair value. Is it right? Fair value of net assets. Fair value of net assets. How much? Fair value of net assets is 114. Okay. How much it will come? 040. Okay. 040. Now, what is in this? What is the NCI share? NCI share is how much? 40 million. Is it right? 40 million into 40%. Okay, 40 million into 40%. It comes to how much? 16 million. It comes to how much? 16 million. Total comes to how much? 6 and 6. 66 million. Is it right? Total comes to how much? 66 million. Is it? This NCI share we have to deduct from the, see what we have to deduct? We have to say that, we have to make it mention that NCI, is it? 1 minute. We have to say NCI, is it? NCI at disposal. Is it right? NCI at disposal, note 3. Is it right? We have to remove that, okay, from this. How much is there? 66 million. It comes to how much? 26 plus 154 minus 66. Is that? Minus 66. It comes to how much? Is it right? It comes to how much? 114. Is that the value? See how much is there? The value proceeds, how much they receive. It is 106, but is it? But if you take all the things into consideration, we are getting the negative value. We are not getting the profit on disposal. Is it? See, if they are reducing, you should understand. Is that if they are reduce, this is the things we should understand the moment we are reading the question. Is it right? When we are reading the question, if there are reducing, if there is a profitable operations, nobody will reduce the stake. If it is non-profitable, then only you will reduce the stake as such. How much is there if you take into consideration 114 minus 106, 4 plus 4, it comes to how much? 8 million. Is it right? This is nothing but loss on disposal. Is it right? Loss on disposal. See, in here they will test the things in small bits. Okay, they will test the things in small bits asset. Now you understand. This is first you have to take into consideration what is the profit for the year, what is the loss for the OCI, what is the share, and we have to show that, and subsequently we have to calculate what is the profit or loss on disposal. You should not write initially profit, or we should not write loss. Is it right? This it will be assessed. Is it right? Now, on that basis, we will calculate the goodwill, subsequently net assets at disposal, and NCI at disposal. Is it right? Fine. This is the first part. Okay. Now, the second part of the same thing. Is it? The second part is what we are talking in terms of they have 40% we have to take into consideration. Is it right? We have to take into consideration the 40%. Fine. Is it? Next. What is there? See, you put one dash here. Is it? You put it. Is it? Now the remaining investment. Is it right? What is the remaining investment? Now what happens? Is it right? So the remaining, how much is the 40%? Gives a significant, it's not a small investment, is that 40%. Now what happens if reduced from 40, again I'm writing, if reduced, is it right, reduced from 60% to 40%, is it right? Definitely what will, is a significant influence, is it right? What in that process, what we are doing in that process, we have to make sure that it has to be accounted. Is it right? Which method they are saying? Initially they are using which method? Goodwill method. Is it right? Initially they have mentioned very specifically which method they are using, where it has been mentioned. It has been mentioned clearly in one of the things. Is it right? Where I will just want to where it is there. Yeah, they are using which method? They are using the goodwill, full goodwill method. Okay, for all. Now the moment it's happening, they are reducing the stake. Definitely, it will not be a goodwill. As per the rules, what will happen? It will change to equity method. Is that? Is that what will happen? Is it right? It will change to what? It will change to equity method based on the rule. Okay. Now again definitely everything will be recalculated. Is it right? Now what is the share of profits? Is it right? What is the share of profits? Is it right? Share of we can say is it? We can say that share of profits. Is it? Previously it is a parent company. Now it will become an associate. Is it right? Share of profits of associate. Is it right? Share of profits of, how much is that? It is 40%. Is it right? It is 40%. Make it a point. How much is there? You have a 1 minute. How much is there? It is, you have a profit of for the year 32. Is it right? Profit for the year. How much is there? You have a profit for the year. How much? Profit for the year. Is it? Profit for the year. How much? 32 million. Is it right? 32 million. 3 months. Okay. 3 months. How much will get? 3 months is 32 into 3 by 12. It comes to how much? 32 into 3 by 12. It comes to how much? 32 into 3 divided by 12. It comes to how much? It comes to 8 million. Is it right? It comes to how much? It comes to 8 million into 40%. Okay. It comes to 40%. It means it comes to how much? 3.2 million. Isn't it? OCI, Is that the same treatment? OCI for the year how much? OCI for the year is going to be how much? It is 16 million. Is it right? It is 16 million. Now for 3 months how much? For 3 months how much? 16 million into 3 by 12. Is it right? It comes to how much? 4 million into 0.4. It comes to how much? It comes to 1.6 million. It comes to how much? It comes to 1.6 million. Fine. This much you have to show. That's all. Is it right? This much we have to take into consideration. What they are asking, see the question again. Is it right? Explain with suitable calculation how the investment in guineas should be accounted for in the consolidated financial statement of profit and loss account and IOCI for the Zippy group for the year ended 30th June. Okay, how you have to. Now what happens? You got 8 million loss. Is it right? You have how much? 8 million loss. Is it right? Means how much you have to show in that investment income is how much? See, this we are not going to show. We are not preparing anything. Is it right? It is only for our understanding. For only our understanding. How much is the investment income? Investment income is how much? Investment income is how much? Where is that investment? 19 million. Okay. How much is the investment income? Is it? No. In that what we have to do is that in subsequently we are going to make the adjustments. Fine. This is where we are talking in terms of the what we are doing. A small recap. Okay, what we have done. First we have calculated for how many months. Second, we have calculated profit for the year. That is the with 60% and with 40%. Okay, with 60% and with the 40%. And there definitely there is a loss of control. So it will become from the subsidiary parent company to an associate company. Then we have calculated profit on the loss of profit or loss on disposal of 20% stake. Is it right? On 20% stake. Then we have calculated, when we are doing that, we have taken into consideration goodwill in note 1, net assets at disposal at note 2, and subsequently NCI at disposal at note 3. Okay, and subsequently what we have done, we have shown what is the profit of after disposal at 40%. What is the profit? Okay, this constitutes, now you can understand, this is not difficult at all. This constitutes how many marks? It constitutes 11 marks. Right? So what is the second question? Okay, what is the second question? What it says, we explain with suitable calculation how the two blocks should be accounted for in the consolidated final statement for the year ended. Is it right? Now, when you are saying that two blocks, is it right? Two blocks. This is, you have to have a good command over. You have a good command over the IAS 16 and IAS 40. Is it right? Point number 2. Is it right? Now, first two blocks, is that what the concept of investment property is? It has to be separately from the regular business. Is it right? IAS 40 says that IAS 40 is investment property. See, you people have done financial reporting. Is it right? For you, it's not that much difficult. It is it? It is a easy scoring section. Is it right? You can score marks very easily. Is it right? If it is an investment property, we are not supposed to do any depreciation. Is it right? Is it right? If it is a property, plant and equipment, there is a depreciation. Fine. That is the basic thing which should be understood about this. Fine. Now, is it right? Now, how much is the you have to, I will mention the rules. Is it right? Is it? If what is the concept of investment property? It is if there can be, if it is going to be, it can be sold, or leased separately. Is it? It can separately. Is it right? Separately from the rest of from the rest. Okay, means that they have made it from the rest of the building. Means they have for 8 floors. 8 floors are independent. Okay, 8 floors are independent. Only first two floors they have taken it into consideration for their own purpose. Is it right? Next, is a property occupied by the subsidiary, they have leased. Okay, they are given second floor. Is it right? The second floor, whom they have given it to boo. Is it right? Is right? It does not call, because it is not qualified for investment. It is their own business entity. Is it right? It is part of the business. Is right? It does not qualify for IAS. Okay, qualify for IAS 40. You have to give the reason. Is it right? You have to give the reason, because it is used by the group. Is it right? By the group. Is it right? Zippy. Is it right? Is right? And that is the reason it has to be. This is the reason. Is it right? This is the reason. This is the reason. This reason it has to be classified as IAS 16. What happened next year, we are not concerned about that. Okay, next year they will vacate. Next year they will do whatever. That is not in our. Is it right? Now what they say that, is it right? What is now? You see the thing. What they mentioned. They said that of the 10 floors at a fair value of 90 million with 15 years. Is it right? The first, is it right? 15 years. The first 2 floors is for them. Is it right? First 2 floors is for them. Is it right? And the 8 floors is for the investment purpose. You have to segregate. Is it right? You have to segregate. Is it how much is the revaluation with respect to the first floor, and how much is the revaluation with respect to the third floor to 8 floors. Okay, now okay, that's what it says. The other 8 floors are led to unconnected parties, and restating all land and buildings at fair value, reporting the only accounting entries in relation to has been correctly included in the rental income in profit. It is assumed that each floor is of equal size. Depreciation is charged. Okay, they have charged depreciation to what? They have charged depreciation to administration cost. Fine. Now, how much? See, just you will write how much is the depreciation. Depreciation is, see, we are talking in terms of 90 million. Is it? Depreciation is 90 million. Is it right? For only 2 floors. Okay, for only, see, how many floors are there? 10 floors are there. Is it right? In 10 floors, 2 floors are for what? 2 floors for the business purpose. Is it right? 2 floors for the business purpose. Is it right? And 8 floors is for what? 8 floors for investment purpose. Is it right? Means if you take 20%, it is IAS 16 and 80% it is IAS 40. Okay. Now depreciation how much? 90 million. Is it right? 90 million divided by how many years? 15 years. Is it right? Into 0.2. Is it into 0.2? How much is there? 1.2 million. Okay, 1.2 million. Fine. This is the depreciation. Only for what? This is for IAS 16. Is it right? First 2 floors. First 2 floors. Is it first 2 floors? Is it next? IAS 40. Is it IAS 5? Is it we are not talking about, we are not calculating the depreciation. There is no concept of depreciation as such. Is it right? Now what happens? There is a revaluation gain. Is it right? There is a revaluation gain. Okay, how much is the revaluation gain for the first 2 floors and how much is the revaluation gain for the next 8 floors? Okay, we have to see that what is the revaluation gain for the first 2 floors. Is it right? Now what is the revalued amount? Is it right? Revaluation gain. Is it right? Is it? What is the revalued amount? Revalued amount. Is it right? Revalued amount is how much? Revalued amount is 96 million. Is it right? Revalued amount is 96 million. See, we have to take 2 floors. Is it right? We have to take 2 floors. The first 2 floors. Is it right? First 2 floors. Is it right? First 2 floors. How much? 96 into 0.2. 0%. Is that? Don't get confused. 10 floors. Is that? 10 floors. 10 floors. Is that? 8 and 2. Okay. 2 and 8. Is fine. Don't get confused that from where we got 20%. Is not. It is 2 by 10. Okay. 2 floors into 10. It comes to how much? It comes to 96.2. Is it right? 96. It comes to how much? 19.2 million. Is it right? 19.2 million. Fine. Now, is it fine? How much is the revaluation gain? Is it right? How much is the revaluation gain as such? Is it right? Yes. Revalued amount is how much? Revalued amount is how much? Revalued amount is 19.2 million. Is it right? Initial value is how much? Initial value is how much? 90 million into 20. Is it? How much is there? It is how much? It is 18. Okay, 18 million. How much is the revaluation gain? 1.2 million. Is it right? Only for first 2 floors. Okay, 2 floors. Clearly mention this. Okay, you should not get confused on that. Is it right? Sure. Next, what is the next 8 floors? Next 8 floors is how much? Same thing. Is it right? Is it right? Same thing. What we have to write? We have to mention what? We have to mention what is the revaluation. Is a reval. How much is the 0.96 million into 0.8? Okay, 0.8. It comes to how much? 96 into 0.8. It comes to 76.8 in times. Okay, 76.8 times 0.76.8. Is it right? Is it 76.8? Fine. Is it 76.8? what is the initial value? Initial value is how much? Initial value is how much? 90 million. Is it right? Into 0.8. It comes to how much? 72 million. Okay. What is the revaluation gain? 4.8 million. Is it? This is revaluation gain for 8 floors. Is it right? 8 floors. Fine. Next. The first 2 floors revaluation gain is how much? The first 2 floors revaluation gain is 1.2. Is it? The next 8 floors revaluation gain is how much? Revaluation gain is 4.8 million. Right? It has to be recorded as an investment income. Is it right? It has to be. Is it? This has to be recorded. This has to be recorded in a OCI. Okay. Other comprehensive income. Is it? $90 times 0.2 1 minute. Revalued amount is how much? 19.2. Okay, revalued amount is how much? Now initial value is how much? You take this a little bit far away from here. Okay, you put it little bit far away from here. It is 19.2 million. Okay, little bit far away from here. Fine. Now, is it right? Is it? Now, how much is there? It is, if you take this into consideration, it comes to how much? It comes to 18 million. Okay, 18 million. Now from here we have not done this. We have to take depreciation. Is it right? How much is the depreciation? Depreciation is how much we have calculated? 1.2 million. Is it right? How much we have calculated depreciation? We have calculated depreciation for the first 2 floors. Is it right? First 2 floors. How much we have calculated? We have calculated 1.2 million. Is it right? When you have calculated 1.2 million, it comes to how much? 16.8 million. Okay, 16.8 million. 19.2 minus 16.8. It comes to how much? It comes to 2.4 million. It comes to how much? 2.4. Here it comes to how much? 4.8 million. Okay. This is the revaluation. The first revaluation gain, this we have to show in what? This we have to show in OCI. Okay. Other comprehensive income. Is that right? And the second one we have to show as a revaluation. In this we have to show it as an investment income. Is it right? This we have to show it as a investment income. Okay. This is what we have to for this they will give you marks. Okay, how much is the revaluation? how much you have to show in the income statement, and how much you have to show in the OCI. Okay, fine. Next. What they are asking us, explain with suitable calculation how the two offices should be accounted for in the consolidated group for the year ended. Is it right? Next. What they said, is it right? They have given two things, is it right? Here in this part, is it right? In this part, what they have said, see, I will put it in this. Is it? During the year, explosion has been happened. Is it right? And there was something with respect to the provisions. Is it right? When it is explosion is happened. Is it right? Now, when the explosion is happened, what will happen? The value. See, the explosion happened at a different office caused by substantial damage. That it is fell from 20 million to 14 million. Is it right? During 2006, an explosion at a different office block. Is it mean different office block is means what we should assume? Is it right? What we have to assume that it is not related to the first two floors. Okay, it is not different office block means it is not related to these 8 floors also. Is it right? It is not related to 8 floors also. Is it right? Now, is it right? It is not related to the 8 floors also. Fine. Continuation to this. Fine. Now, explosion. Is it right? See, explosion happened. Is it right? Explosion happened to what? To the different. You see, when you are talking about the things, assume it is an investment property. Is it right? Investment property. When it is investment property, it is IAS 40. Okay. In IAS 40, value has been decreased. Is it right? Value has been decreased. When value has been decreased, it is a loss. Is it right? It is a loss. Is it? It is loss. It is not an impairment. Is it right? It is not an impairment. It is a loss. When it is a loss, it has to be treated as a loss. Is it right? We should have to make it very clearly that IAS 36. See how many standards we are working it out. Is it right? IAS 36, impairment of assets. Is it right? IAS 36, impairment of assets, as it does not apply to investment property. Is it right? Is it? It has to be recorded at fair value. It is it? So with appropriate treatment. Is it right? With appropriate treatment of profit and loss. If appropriate treatment of profit. What is the value of the building? The building, how much is it? 20 million. Is it right? 20 million. And how much is the after that fire? What is the value? The value has fell down to 14 million. Is it right? Is it right? Is it right? Initial value is how much? Initial. Is it right? Initial value is how much? Initial value is 20 million, and after explosion, is it right? After explosion, value is how much? Value is 14 million. Okay, 14 million. How much is there? 6 million is the loss. Is it? It has to be charged to, because it it has to be charged to investment income. Means definitely it is a loss, is it right? You have to deduct it from where? You have to deduct it from the investment income. Fine. This much you have to write, is it right? Marks will be given for this. Next one, what they have said, the second part, is it right? The second part, they say that there was a repairs, is it right? There was a repairs, and they don't know whether they will take the repairs or not. They are talking in terms of what? They are talking in terms of provisions, is it right? They are talking in terms of provisions, is it right? They are talking in terms of provisions. Provisions are what? Provisions as per IAS 37. Okay, see the things. One question, how many things they are covering, is it right? In one question, it is called as a provisions, contingent assets, is it right? Contingent assets and contingent, we have to put first contingent liabilities and contingent assets. Is it? Contingent liabilities and contingent assets, is it right? Now see, they have not decided, is it right? They have charged, what they say, they have charged to what? Just go through it, is it right? What they have mentioned, they said that a provision has been charged to other expenses. See the thing, they have been charged to what? See, when they have not decided, is it right? They have not decided. They say net estimated is 3 million required to repair the block. They are unsure whether they carry out repairs or whether they are not sure. Is it right? They are not decided. Is it right? They have not decided. Fine. When they have when not decided. Is it right? When not decided. It should not to be charged, is it right? To be charged to the expenses, is it right? Is it? These expenses, is it? These cost, is it right? These expenses, should be, these expenses of 3 million should be reversed. Is it? Should be reversed. Okay. So because you don't have any obligation, is it right? They don't have any obligation as such. Is it right? This much you have to mention. What we have done, we have mentioned with respect to the explosion, and we have mentioned with respect to the provisions as such. Is it right? This is the part of the point 2. Is it right? What the point 3 says. Point 3 says, explain why accounting treatment for the 10th floor office block in Zippy individual financial statements will differ from the treatment of consolidation. Is it right? Now, what again? Is it right? Now, when we do the things, is it? This is point number 3. Okay, this is point number 3. See the things. If you work out one question, you can cover as many things as possible. You will have very clear. We have done IS 16, we have done IS 40. Is it? We have done IS 37, we have done IS 36. Is it right? We are covering a wide range of standards. Is it right? In every case, every point, you have to refer the standards. That's the most important thing that has to be considered. Is it right? Now, when you are talking in terms of what? Individual financial statements. Is it right? Individual financial statements. Is it right? See, as again we have to give, is it right? With reference to as per. Is it right? as per IAS 10. What IAS 10 talks about? IAS 10 talks about the consolidated financial statements. Is it how the treatment has to be given with respect to the consolidated financial statements? Is it in terms of what? In terms of parent company, in terms of parent company and its subsidiaries. Now what happens is, this is what it has. You have two things, is it right? You have two things. You have 10 floors, is it right? You have 10 floors. These people are using 2 floors and these people are using 8 floors. Is it right? These people are, now in these people, is it right? They are two. The Zippy is using 1 floor, is it right? And Blue is using another. Fine. They are not charging interest, rent. Okay, they are not charging interest, rent. But what does it? Doesn't mean. But it, if you take into consideration, it is used by a single economic entity, is it, for administrative purpose. The second floor should be, see, both has to be, is it right? If you take into consideration with respect to the consolidation, is it right? Is it right? With respect to the consolidation, if you take into consideration, is it in terms of consolidation, consolidated financial statements, it has to be treated as IAS 16, okay, property, plant and equipment. Is it right? Now, if we are taking individually, is it right? If we are taking individually, is it right? Then the second floor, is it right? Then the second floor should be treated as IAS 40. Is it? Second floor treated. You are not taking rent, fine, but it is like an investment, is it right? If you are taking individually, second floor has to be treated as IAS 40. If you are taking it as a group, both the floors should be treated as a property, plant and equipment. Is it right? Proper. Now what happens if the class, it will happen, is it? It will affect what? It will affect the depreciation as such. Is it? It will affect the depreciation as such. Is it? If you take individually, is it right? If you take individually, depreciation will be less, is it right? If you take as a group, it will affect profits, okay? It will affect the profits, is it right? Because when you are taking it as a individually, is it right? For one, we take it as a first floor is as a depreciation, and the second floor is for the rental purpose, is it right? In IAS 40 we will not calculate depreciation, is it right? In IAS 60, if you are using for our own purpose, we will calculate the depreciation, is it right? Otherwise in the IAS, that is what we have to write, is it right? IAS 16 relates to what? It relates to, it has relates and relates to consider what? To consider depreciation, is it right? Whereas in terms of, is it right? In terms of IAS 40, is it right? Yeah, IAS 40, definitely it is related to what? It is related to the investment property. What it said, the revaluation gain will have impact, is it right? The revaluation gain, is it just for you, just is it the revaluation, the revaluation, is it right? The revaluation gain, is it right? In OCI will have impact. Will be less, and it than the gain in the profit and loss account, is right, and the gain in profit income statement, profit and loss account will be high. Is it? You have to mention like this. What the purpose of asking this question is, we should have a clear cut understanding about how IAS 16 and how difference between IAS 16 and IAS 40. If as a group we are taking, we have to take as a property, plant and equipment. But if you are taking individually, for the Zippy company, its first floor is for the property, plant and equipment, and the second floor is for the investment purpose. Is it right? This is the comprehensive explanation about the concept about the IAS. See here what we are doing, we are referring with what? We are referring with IAS standards. Is it? These are the first three parts of that. Is it right? Coming to the next segment. What is the difference between OCI and profit and loss account? Is it right? Rationale. Why some gains and losses can be or others cannot be reclassified. What is the reasons? Is it? They are talking about brief discussions about employee benefits. Is it right? Employee benefit. When we are talking about the employee benefits, is it right? See the thing. Is it? Yeah, what are the employee benefits? See, what is the reason? First, you should understand what is the difference between an OCI and we are talking about in the profit and loss account. Is it? Profit and loss account. What is the profit and loss account? Includes all income and expenses. Is it right? Profit and loss account includes all income and expenses. Is it? There's something which is as per IFRS. Is it right? As per IFRS, permitted by IFRS, we have to differentiate what we have to use in OCI and what we have to reflect. See, in profit and loss account, what is reflected in OCI? There is any revaluations. Is it right? Anything. The conceptual framework states that, see, we will say that this is the, when we say this is the profit and loss account, this is the primary source. See, major part, is it right? Major part constitutes in the profit and loss account only. Is it? Major part constitutes about profit and loss account only. Is it right? When we say it is a conceptual framework, is it right? We say it provides what? Profit and loss account gives the all. It provides the more relevant. It is more specific. Is it right? It is more specific and more relevant. You don't have any doubt here. Is it right? When you are talking in terms of profit and loss account, is it right? See, that is the reason what we are doing. When we are doing the thing, we always say it is going to be what? It is going to be true and fair. Is it right? True and means one of the qualitative characteristics. Is it right? One of the qualitative characteristics. Is it right? Characteristics of financial accounting says that it is what? It talks about what? It talks about faithful. Is it right? It talks about faithful representation. It talks about what? It talks about faithful representations. Is it right? Now, this is what is it. See what happens. See, you cannot show in both the. See what happens. One year you are showing here, 1 year you are showing though there. It should not be there. Is it right? It should not be. It should be more consistent when doing the problem. More, it should be more specific. And it we cannot say that it is applicable uniformly. Is it right? We cannot say that is it right? It applicable the it will be uniform in all situations. Is it right? Uniform in all situations. Is it right? It is case by case basis. Is it right? It is case and it is by standard by standard. Is it right? Standard by standard. Sometimes what will happen? Sometimes we have to see which standard we are using. Is it right? Which we have to using. And the most important. That's why I told you. 1 year we should not show in the profit and loss account, and another day we should not show in the OCI. Okay. Now what happens? They are talking in terms of what? They are talking in terms of IAS 19. Is it right? We are talking in terms of IAS 19 with respect to what? With respect to employee benefits. Mostly employee benefits, end of service benefits. Is it right? You are talking in terms of end of service benefits. Is it right? In end of service, you are talking in terms of pension plans. Is it right? You have talking in terms of pension plans. Is it? See what happens when you are talking about the thing. If you have a defined, is it right? We have a defined schemes. Is that we have defined? Is that defined? Clear cut. Is it right? Clear cut. Is it right? Very specific. Then it has to be shown in what? If it is, it has to be shown in the. It has to be recognized in profit or loss. Sometimes what will happen? There will be a revaluation. There will be not revaluation. There will be a remeasurement. Pension schemes, is it right? Because of various different is it basically what in terms of pension schemes? Is it right? In terms of pension is very volatile. Is it right? It talks about life expectancy. Is it right? Somebody will die within 40 years. Definitely, we cannot. We have to calculate as per the initial agreement. Is it right? But what will happen? Definitely, the amount will vary. The calculations will change. Is it right? The calculations will change. That is the reason. Sometimes what will happen? They are talking in terms of increase or decrease wage inflation. Is it right? Inflation component will happen. Is it right? Because initially we will come to an agreement that when he joining the service, we'll take that into consideration. Is it right? We'll take that into consideration. Sometimes what will happen? There will be resignations. Is it right? There will be resignations. There will be voluntary retirements. Is it right? There will be voluntary retirements. Is that nowadays when you are talking about the Canadian country, Canada, is that recently they have said that in Canada people are retiring well before the retirement age. For 50-55 years they will retire. Is it right? Means they will have they say that you have to work for 20 years and after that you can avail that opportunity. In that case, what will happen? Some people will take and some people will forego it. People who are opting for a voluntary retirement, is it definitely that has to be considered. Is it right? What they say that this has to be have a clarity. Okay, this is most important thing. The purpose of doing is, if you are doing this, is it right? This concept, is it right? This concept should have clarity. Is it very clear? Is it? We should not say that. It should not say that if it is happening in the current year, is it right? It has to be taken into profit and loss account. If there is any plus or minus adjustments are there, it has to taken in the in the reclassification one. Okay, that's very clear. Is it right? Is it right? Whether we should take into consideration into profit and loss account, or we have to take into consideration OCI. Is it? Immediate see what we are doing. We are making a point. We are using the concept of prudence. Is it right? Conservatism. Is it right? We have to take all the precautions. Is it? We have to take all the precautions as such. And we should not, and what we are doing, we are talking in terms of matching concept. Is it right? We are talking in terms of matching concept. We are taking in terms of realization also. See, so many things will come. Is that if it happens? Is it right? If it happens? Is it right? If it happens in current year, is it right? We should not carry forward. Very simple message. Is it right? Is it right? Immediate recognitions, if it recognizes. Is that what they say? See, again, when we are doing this, we are talking in terms of what? We are talking in terms of qualitative. Is it right? We are talking in terms of qualitative characteristics. Is it? What they say? You have to be transparent. Is it right? Transparency should be there in presentation of financial statements. Is that if it is happening, fine, show me it immediately. As simple as that. If it is, we should not carry forward, or we should not hide it, and we should not say that it will be shown in the next year. Is that? That has to be avoided. Is it? That has to be avoided to the extent possible whenever we are talking in terms of the concept which is there with respect to the profit and loss account and other comprehensive income. Is it? Means if it is very defined, it has to be shown in the profit and loss account. That is the purpose. Other comprehensive income, other means definitely there will be little bit, we cannot say doubtful, but the clarity of thought will not be as simple as possible. Okay, as straight as defined. Okay, this is a brief summary about the concept with respect to other comprehensive income. Okay, hopefully you have got a basic understanding. Is it right? Basic understanding about the explanation. That's why we have done. Is it right? We have done with respect to the reducing the share of the parent company, and it becomes in the associate, how it has to be treated. Then we have done with respect to the investment property and property, plant and equipment, and subsequently we have done explosion, the provisions. Is it right? We have done the provisions, and we have done with respect to the explosion and the provision of 3 million. That is the first part, and second part is we have taken into consideration. Is it? We have taken impairment of assets. We have done, and last but not the least, we have done with respect to other comprehensive income and profit. Hope you have a clarity on this. If you understood this, you can like this video. You can share this video. Please subscribe to my channel, and I will come up with the video on regular videos till March 2023, and subsequently, is it right? To every wherever is possible, I will come up with videos with respect to specific topics and specific subjects, so that it will be easy for you to have the understanding and hoping to get good marks. Thank you so much.